Hi again, this is Timothy Sykes, and I am here for another free video lesson. We have more video lessons coming. Stay tuned for the future video lessons. Video lesson number 7 is going to be just amazing. It's going to blow your mind, but we have to build up to it. You need to understand the basics first. This is video lesson number 4. What is technical analysis? As I discussed in the last video, I love buying breakouts and I love looking for breakdowns. These are chart patterns. Technical analysis refers to chart patterns. And when you have these chart patterns in stocks, they often become self-fulfilling prophecies because all the traders know these patterns. We're looking for a set criteria. And if you look at my students who consistently make money day in, day out, week in, week out, it doesn't matter whether you have $1,000 or $500,000, as I discussed. Some of my best students are in college or working full time, and they're still making money on the side, and that's beautiful. But they understand the criteria, and I'll get into the specific criteria in a little bit, but I need you to understand that charts matter. So look at a ton of charts, and there's a lot of free books and cheap books. Go to your local library and do a search for technical analysis. There's tons of books about learning these chart patterns. I like to focus on simple ones. So learn them if you want, but you don't have to study as hard as you might think you do. Why do technicals matter? The answer is because traders care about them. Investors care about these charts. Because if you look at any stock over a year, over 5 years, over 10 years, there are key indicators. And when there's a breakout, when a stock hits a new high that it hasn't been able to cross over, it's like a new threshold, it's often an indicator that the stock is going to keep going. Okay? And because that's an indicator that the stock is going to keep going, traders recognize this. And when traders recognize this, let's say you have 1,000 or 5,000 traders looking for one specific price, and if that price breaks up or down, whether it's a breakout or breakdown, those traders are going to jump on. And that's predictable. So understand these key breakout and breakdown points as I discussed. But what is fundamental analysis? I don't just look at charts. My strategy is very well refined. Remember, I've been teaching for over a decade, so I'm not like some new beginner who's like, oh, I think this works. I've seen exactly what works and what doesn't over the years. And you need to combine fundamental analysis with technical analysis. And fundamental analysis is basically just analyzing how healthy a company is. What are the sales? What's their cash? What's their revenue like? What's their profits like? And, since I trade penny stocks, usually the fundamentals aren't very good. So you can just say, oh, the fundamentals aren't very good. Okay, simple. Well, there's specific things that you can look at. So, I'll go into this in a little bit with some examples, but understand that you need to dig into the fundamentals. And there's lots of free websites right on Yahoo Finance. You can look at a balance sheet. And, you don't need to be an accounting major to see when a company has zero cash, guess what? The fundamentals aren't that good. And so why do fundamentals matter? Yes, you have a lot of traders and investors who use momentum and these stocks move up or down based on these traders, but fundamentals matter because you have to know how good the company is. If you're betting against a company for a day or a week or an hour, you should know, is this company fundamentally sound? If this company is making the next, I don't know what a hot toy company is, like if they're making the next Elmo doll. I remember Elmo was a hot doll a few years ago. You don't want to bet against it because that product is very good. So you need to examine just how good these products are. And you don't need to be like a technology guru. Keep it very simple, as you'll see in a little bit. So let's get to some examples. I'm tired of saying, oh, I'll show you some examples in a little bit. Let's get to them. So here is the ticker symbol DROP, drop, a company called Fuse Sciences. And this is a chart of the past few weeks. And you can see here, I drew a nice blue line in the center. It couldn't break 50 cents, 52 cents to be exact, for quite a few weeks. Each one of these little ticks on the chart represents a day. And it couldn't break it. And then you can see right here, on December 9th, it broke it and went up to 75 cents. And 2 days later is $1.25. So you would have nearly tripled your money in 3 days when it broke out. This is a breakout. And the beautiful thing is that when it came back down, it held 52 cents pretty well. And so I actually made money shorting it, betting against it when it got too overextended here in the ones. And then I bought it on the dip because I thought that it would bounce. And it bounced a little bit. It didn't bounce huge. But there's money to be made on both sides. And this company has terrible fundamentals. They have no revenue, very little cash, but they have Tiger Woods endorsing the product. So people are like, oh, Tiger Woods, why would he get involved with a penny stock? Well, so it's not a clear-cut picture, and sometimes it is. With some other examples, I'll show you these companies are terrible. Drop, we don't know if their product is good or not, right? They're just introducing it right now. They have Tiger Woods who says it's good, but they have no money, they have no revenues, and the company is valued at roughly $50 million. So I use technical analysis. Fundamental analysis didn't work in this case. And sometimes, I'll look at the fundamentals and technicals and I'll decide what do I think actually matters. When you have terrible fundamentals, meaning no sales, no cash, and, you're not sure of anything, that's okay. But the technicals matter because you can see here that it was a clear breakout, and when it came down, it held that same level and it bounced a little bit. So my students and I, here's my first short. I bet against it right around 93 cents. I covered at 84 cents. So I made like 10% in a day, $1,600. Not bad. Nothing huge, but not bad. Here is one of my students. This guy is just out of college. He looks like a young Jon Stewart. He made $1,200 and he only invested $10,000 in a day. That's pretty sweet, making 13% in a day. I mean, this is not rocket science here, and he basically just bet against it when it got too high. Because again, when you're not sure about the fundamentals, other people aren't sure about the fundamentals. No one here is smart trading penny stocks. Okay, if any of us were smart, we'd be running billion-dollar hedge funds. These are just people who are just guessing. Oh, Tiger Woods is invested in this company. Let me buy in. Well, that's fine, but when a stock triples in 3 days, it's probably gotten ahead of itself. So we bet against it and we profited. But again, with that blue line, because I thought that, okay, since the fundamentals aren't a clear-cut picture, that means that when it drops too quickly, some people are going to say, you know what, this is a good dip buy. Tiger Woods is still promoting this. So I bought it at 54 cents, and the next day I sold it at 62 cents when they were introducing one of their products. I made $3,400 in a day. That's awesome. And it didn't bounce as much as I wanted, but it was a pretty decent bounce. And here's, this is my guy Bob Garrett. Right? He's one of my students, and he tried to do the same bounce. He didn't have that great of an entry price at 58 cents, so the next day he sold at 60. He made a quick 500 bucks. Making $500 in a day when, you're not sure. He said, tired of price action, so I got out. He was tired, and he made $500. That's awesome. So sometimes it's going to be a little confusing like this. I wanted to show you this example. This isn't Candyland. There's not unicorns and little elves all over the place. Sometimes, it is going to be a little confusing, but you can still profit if you focus on basic technicals, which is, breakouts and breakdowns. But here's an easier one. Here's SPAH, and each one of these ticks represents a day. It went from 10 cents to 80 cents in 4 days, and now it's back down to 20 cents in roughly a week later. And you can see the volume was huge. This company sent out tons and tons of email propaganda saying, oh, this is so good. There's no technical analysis involved here. It's just when a company goes up 8 times your money in 4 days, you do some research. This company is not good. Not good at all. They have no cash. They have no revenues. They're in debt up to their eyeballs. And whoever paid, the rumors are $600,000 to $750,000 for this email campaign, they just wanted to sell out. This is a pump and dump. So knowing that, I started betting against it. I started betting against it at 75 cents, and I covered my short at 55 cents. I made $2,700 in less than an hour. And I got greedy, like I made so much in an hour, I probably should have held because I knew the company was worthless. Remember, the stock came all the way back down. So I should have held, but making $2,700 in an hour is pretty great. I also reshorted, so I betted against it again. I take my profits, but I keep coming back in because when I did my fundamental research, looking at the revenues, looking at their debt, and looking at the lack of cash, I couldn't help but bet against it even more because even at 50 cents, I thought the stock was worthless. But again, I got weak and I covered at 41 cents. I made $3,800 in a day. I get weak making a few $1,000s. I can't help it. Here's my latest short. I shorted at 44 and covered at 33, and I made another 3,700. So I'm making thousands. I'm making over $10,000 on this. Here's one of my students, Alexander Bevo, Captain Puker. He's still in college, and he made $4,000. And apparently he's traveling, I guess, for the holidays. Trading and traveling is fun. So he's traveling and he made $4,000 in less than a week. Here's another guy. He says Tim Sykes' method rules, even with buy-ins. This was a nice win. And this is one of the risks. When you're shorting, you're actually borrowing from your broker. So you're taking out a loan to short. And, that broker can call in the loan. And, that happens. But in a week, this guy still made $1,000. So he loves it. He's loving life. And here's, young John Stewart again, made $3,700, made 26% in a week. Again, remember, mutual funds, long-term investments. You ask your financial advisor, and he'll say, is 26% a good return in a year? And he'll say, yes, that's amazing. How do you make 26% in a year? Well, I'm teaching you how to make 26% in a week. So it's a whole different ball game. This guy did not invest that much money, and he made $3,700. Here's one more example. This is ticker symbol RAYS, Raystream. This is another kind of pump and dump where the stock goes up from 1 to 250 because of all these emails being sent. Then it collapses in one day. More emails are getting sent, it comes up, and it collapses again, and then more emails, and guess what? It's probably going to come back down. But there's support at $1 a share. Only one day did it drop below $1 a share. So you have to understand, yes, all of these companies are fundamentally worthless. If you dig into this company, they have no cash, they have no product. It's the same type of fundamental analysis with everything. But you also have to combine that with technical analysis and realize, yes, even though it's worthless, it's bounced off $1 a share once and twice. So you got to take profits if you're going to bet against it. And guess what? You can even buy it on the dip because we know that $1 a share is fundamentally important and technically important. So here's one of my shorts. I shorted this at 118, and I covered at 108 because, again, remember, I know that $1 a share matters. So even though I'm betting against it as it's coming down because the pattern was perfect, it's straight out of my DVDs, namely Penny Stocking Part 2, I had to cover and take profit. So I made $1,300 pretty much in a few days. This guy, Elkwood, awesome. He held for a week, and he held from nearly 2 down to 122 because, again, he took profits because he realized that at $1 a share, there's probably going to be some support. He made $16,000 in a week. This is awesome. This guy is up over $250,000 in 2011 alone, and he had never traded much before, okay? And now he's making $250,000. He's one of my best students, and he plays golf all the time, and he loves to drink. I hope you guys meet him. I throw a conference every year in Vegas, and he comes, and he's just bombed out of his mind. But he's loving life because he's making $250,000 a year playing golf and drinking. That's a pretty good life. Here's another one of these guys. He basically he risked it. He was shorting that one day where it was at 118, and it looked like it was going to keep fading. And remember, $1 a share was support, but sometimes it goes a little below. He covered at 94 cents. Technical analysis is not perfect, okay? It's a good guide to saying, okay, here's support, and this is a level that it might not break out or break down at, but it's not 100% perfect. My strategy isn't 100% perfect. It's just a guide, but this guy still made, $1,500 in 3 days. There's another guy who made $1,400 he held for 2 weeks, and he had a very small position. I mean, he made 40%. We're talking this guy invested less than $4,000 and he's making $1,400, and he held for 2 weeks because he realized, you know what? Let me do the research on this company. The stock is up because of mailers. There's no revenues. There's no cash. Again, there's nothing behind it. The fundamentals are bad. But he respected the $1 a share support. So he made 40% on his money. Awesome, awesome trade. And here's just another example from Alexander Bevo. I call him Captain Puker, again, because he can't drink. If you ever try drinking with him, don't give him many drinks. I think he can handle like 2 or 3. But he's still in college. He's young. And he made $500 in a day. And this is when he went the other way. You can see he went long the stock. Even though we think that the company is worthless, that doesn't necessarily mean that you have to bet against it all the time. Remember, my strategy, I made $1 million buying companies. And all of them turned out to be worthless. Not one of the companies when I first started in 1999 or 2000 ever made it. Most of them are out of business or their stocks dropped 90%. But there is a time to buy. And he realized that, guess what? $1 a share is support because he understands technical analysis. He understands my criteria. He has all my DVDs. He's in my trading challenge. So he bought and he sold the same day, just a small position, but he made $500. That's awesome. So stay tuned for my next video. These are just a few examples. We have a lot to go over, but now you understand why technical analysis and fundamental analysis works. Next video, wait till you see how these people are making full-time livings off just trading part-time. That is the dream. See you soon.